Okay, so we've got a question here that's asking us whether or not we should accept or reject a special order. So let me read through the problem really quickly. Freedom Factory incurs a cost of $45 per unit, of which $15 is variable, to make a product that normally sells for $57. A foreign wholesaler offers to buy 5,657 units at a cost of $22. So that's significantly lower than their normal sales price. Freedom will also incur shipping costs of $1 per unit. Combine the increase or decrease in net income. Freedom will realize by accepting the special order using differential analysis and complete the below table, should they accept the special order. Of special note, round all answers to the nearest whole unit and whole dollar. Enter negative numbers with a minus sign. Okay, so you can see here I've actually already filled in the zeros for reject, because what's important here is under differential analysis, we want to look at what will happen if we reject the special order and what happens if we accept the special order. Now, under differential analysis, the only things that are going to be important are those that vary between the two alternatives. For example, those fixed costs that we incur whether we reject or accept the special order are irrelevant because they aren't going to change. So we're only looking at the incremental items that will change. So let's go through. If we reject that special order, our revenue will not increase, nor will our costs, and our net income will not increase or decrease because of that. Now, if we accept the special order, we are going to see a $22 increase in revenues times the number of units, which is 5657. So we will bring in an additional $124,454 if we accept that special order. Now, of course, there's some costs associated with accepting that special order, and those are simply our variable costs. Remember, our fixed costs are already going to be covered by the other units that we're producing. So if we normally have a cost of $45 per unit and our variable cost is only 15 of that, then we are going to incur the $15 cost, the variable cost, plus the $1 in shipping costs times the 5657 units that we would be producing. So if that's the case, we're going to incur additional costs of $90,512 to manufacture those items. Again, remember those fixed costs are going to be there regardless, so we can ignore them because they're irrelevant for this type of decision. Then if we take our revenues minus our expenses, that will give us an additional net income of $33,492. So if we look at the difference between the two alternatives, whether we accept or reject this special order, you're going to see that obviously we should go ahead and accept this special order because we're going to make almost an extra $34,000 worth in revenue. Whereas if we reject that, we're going to miss out on that. Now, there's some other considerations that you have to take into effect. Will sales of your other products suffer because of accepting the special order? You don't want your other customers to find out that you gave a special deal to Freedom either, so you have to be a little bit leery of that. Will it affect future sales? Are they always going to demand a special order? So there's some non-financial considerations as well, but if we're looking specifically at the financial considerations, we would go ahead and accept that.